Good morning, everyone. Thank you for dialing into our first webinar in a series of 3 webinars focusing on tax issues specific to Saudi Arabia. So this first webinar will cover the recently announced GAZT amnesty initiatives. So these are aimed at assisting taxpayers who are suffering economically due to the impact of COVID-19. Our second webinar, which will be held next Monday on the 11th of May, will focus on VAT updates and complex VAT issues in Saudi Arabia. Our third and final webinar in the series will be held next Wednesday on the 13th of May, and will focus on corporate tax and zakat in Saudi Arabia. So if you haven't registered for these, the next 2 webinars, you still can. Just reach out to anyone from the Keypoint team and we should be able to assist. Your presenters today will be myself, Mark Gamble. I'm a senior manager in the VAT team, and Raman Ori, another senior manager in the corporate tax team. We'll be assisted by 3 panelists. So we have Omar Hisham, a senior manager who focuses on VAT and excise and customs. We have Dinesh Ravi, who's a manager in the corporate tax team, and Dawhan Hung, a manager in the VAT team. So they'll be ready to take any questions you have. The practice of asking the questions, there's a Q&A function at the bottom of your screen. So feel free to ask any questions throughout the webinar and we should respond to you. If we don't get around to responding during the webinar, don't worry, we'll send you an email with the answer. So feel free to use that throughout. So I think it's safe to say that GAZT has led the way in the GCC in response to COVID-19 as far as implementing measures to assist taxpayers. So in conjunction with previously announced filing extensions, the GAZT has introduced an amnesty on penalties associated with tax compliance. So this amnesty is very wide-reaching. It covers all taxes: income tax, VAT, withholding tax, excise. And broadly, the assistance can be broken down into 4 categories. So you have your deadline extensions. So these are for both return submissions and payment dates. These have been extended for certain tax periods. You have penalty waivers. So this essentially encourages taxpayers to disclose any errors and correct any mistakes by the fact that they won't be hit with penalties on the correction. It also assists those taxpayers who haven't registered for tax to register and not be in fear of getting hit with penalties. There's also the deferring of payments of tax liabilities. So this is in line with the extension for the submission of the returns. And that often provides quite a great cash flow benefit for businesses. And it also applies to those importers of goods who can now defer the import VAT to the VAT return date. And finally, there's a number of administrative measures. So these, for example, cover import VAT that is now reported on the VAT return and not at customs, as well as some other measures which we'll cover throughout the webinar. Just remember, you have until the 30th of June 2020 to take advantage of these amnesty measures. So the clock is ticking. It's less than 2 months now to take advantage. And I guess you probably shouldn't leave it to the last minute, because if the GAZT's inundated with requests, it might push out the deadline and you might miss it. So we'd highly recommend you consider this now. So we'll cover each of the taxes and how the amnesty applies to them. Now, and we'll start with corporate income tax, and I'll pass over to Raman.
Thanks, Mark. Good morning, everyone. Yeah, I mean, certainly the GAZT has taken the lead in the region by announcing a whole host of measures aimed at easing the burden for businesses during these tough times. Following the announcement way back in March, we've seen announcements made by the Omani Tax Authority and more recently the UAE Tax Authority as well, of similar measures introduced in those countries as well. So we'll start with the corporate tax. So an announcement was made that there will be a 3-month extension to the deadline for the tax returns which are due to be filed within the initiative period. The initiative period being from the 18th of March 2020 to the 30th of June 2020. These measures not only apply to the filing, but also to the settlement of the due tax. So businesses can now take advantage of having to pay their tax 3 months later. Just one other point on this slide is that the filing periods that do not fall within this initiative period. So giving an example, those businesses which have a March year end, the extension would not apply, and they would be required to file the return on the normal due date, which is the end of July this year. By way of a recap, as I'm sure you're all aware that there are no taxes applicable to 100% Zakat businesses. But if you're a taxable business or you're a mixed business, then there is a penalty, a late filing penalty of higher of 20,000 Saudi Riyal and up to 25% of the unpaid tax. There is also a late payment penalty of 1% for every 30 days delay. And this 30-day clock starts from the due date, from the original due date of the due tax to the date the tax was actually settled. And there is also a one-off late registration penalty for late registrants. So basically, as part of the amnesty measures, these penalties have been waived if and only if you are able to file your returns within the initiative period. These not only apply to your current filings, but also if you would like to amend a previous filing, or if any of your returns are currently under an audit review by the GAZT, you also have the option of filing in this period and saving on these penalties. We can illustrate this as to the saving that can be made by just going through this example.
So if we look at this example, so Company A submitted its tax return for the year ended 31 December 2018 in April 2019. Subsequently, the taxpayer identified an error, increasing its tax liability by 500,000 riyals. By filing an amended return in May 2020, so under these amnesty measures, the company will save approximately 185,000 riyals in penalties. And these penalties are made up of two things. So firstly, the unpaid tax penalty, so which is 125,000 riyals, which is calculated as 25% of that tax shortfall amount, as well as a late payment penalty of 60,000 riyals, which again is calculated by the shortfall times by 1% times by 12 in this instance. So as you can see, the amnesty measures actually, if you have made mistakes and you disclose them now, you can have a significant benefit in avoiding these penalties.
Just one thing to add to that is obviously the unpaid tax penalty will remain the same, but say for instance, if you do not file the amended return within the initiative period, or say you file it in 2021, the late penalty would continue to accrue at 1%. So you could be looking in a year's time at a late payment penalty of 120,000 if it was late by more than 24 months. So how can businesses benefit from these measures? Well, quite simply, there's clearly a cash flow benefit to them. The GAZT has given them the opportunity to defer their payments by up to 3 months. In addition, you could also agree an installment arrangement by putting in a request with your relationship manager at the Gazette. Once approved, you can pay by installments, but do be mindful that the installments need to be settled by the 30th of June. Otherwise, the penalties would start applying on any subsequent payments from the 1st of July. And another benefit to the business is that the Gazette has started to issue the Zakat certificates to all taxpayers. And this would be a welcome relief for a lot of businesses in Saudi Arabia, because as I'm sure most of you are aware, Zakat certificate is required for a number of things. So for example, renewing of work visas, renewals of your Saudi Iqamas, pitching for new contracts, and more importantly, retention money withheld by government departments will only be released to the taxpayer on production of the Zakat certificate. So all in all, there's a fair amount of benefits which the taxpayer can avail of by utilizing this amnesty measures. So what should businesses be doing now between the 7th of May and the 30th of June, just under 8 weeks? Well, I guess the starting point would be to review your past returns. Maybe you could look at reviewing the last 2 or 3 years returns to check for any disallowances, or if you've reported any capital expenditure which you shouldn't have. Other examples could be you've charged withholding tax or overseas tax. All these are not tax deductible, and needless to say, you could find that you had some arithmetical errors in the tax return as well. So you could sort of have a review, a procedure in place whereby you can review the returns, and if necessary, you could look to amend and file it during this period. Another measure is perhaps looking at certain tax-sensitive items, so which are considered to be high risk and often come up in a Gazette audit. For example, pre-incorporation expenses, whether it should be charged on the first day of trading or should be capitalized and then depreciated or amortized year on year. Another example is where you've been charged an expense by a related party. So say whether it is rent or royalty or interest or support services. The question you need to ask yourself is, do you have the agreements, the invoices? If the Gazette comes knocking on your door tomorrow, can you justify the basis of this charge? And if you cannot, or if it's arbitrary in nature, then it could mean that you may need to revise your tax position. You could also look at past assessments that have been agreed upon with the Gazette and certain tax treatments that you've accepted as part of the negotiations. So for example, if you have in the past disallowed the excess of the GOSI expense charged in the return, or foreign imports, if they're in excess of the value reported in your custom bayan, if these have been disallowed or agreed with the Gazette that they would be disallowed, then you probably would want to look at your more recent filings and see that you are consistently applying that treatment in order to minimize another audit by the Gazette in the future. You could also be a bit more proactive in approaching your relationship manager in the Gazette, because this amnesty also extends to returns that are currently under review, but the Gazette has not yet issued an assessment. So by approaching the RM, presumably if it has been discovered that there were some errors, then you could look to amend the filing in this period and save on penalties which would be issued as part of the assessment. Finally, this is a good opportunity to have a look at your transfer pricing documentation. Just briefly to touch on that, in Saudi Arabia, you have 5 documentation requirements from a TP perspective. The first 2 are the master file and the local file, and they are for businesses that have related party transactions in excess of 6 million Saudi Riyal a year. There's also a requirement to file a country-by-country report in December every year for very large businesses, and also zakat headquartered businesses in Saudi Arabia with with a group turnover in excess of 3.2 billion riyals. And you also have the compliance requirement year on year, where you, where you are required to file the controlled transaction disclosure form and provide a TP affidavit signed by a SOC licensed auditor that goes with the submission of the return. So with that, I'll pass it back to Mark to discuss the VAT.
Thanks, Raman. So we'll cover the amnesty measures now for VAT. So as many of you are probably already aware, the GAZT has extended the deadline for the filing and payment of VAT returns for certain tax periods, as you can see on the slide. So 2 lodgement periods have already passed. So some of you may have already used this extension. But for the current month, so for April 2020, normally this VAT return is due at the end of this month, so the end of May. But now it is extended to the 31st of August 2020. So practically, I guess, how should you approach these extensions? If you're in a refund position, look, it probably doesn't make a lot of sense to use the extension because you want to try and get that cash back into your business as soon as possible. But if you're in a payment position, so if you have a VAT liability, you'll obviously get a cash flow benefit through the extension by delaying that payment by 3 months. So, I mean, our suggested approach would be proceed with business as usual with the preparation of the VAT return and the submission. But if you're in a payment position, consider delaying payment to take advantage of the cash flow benefit. You obviously don't want to fall back with your VAT return preparation. So if you keep on top of that, it should assist you going forward. The penalty waivers are probably the most commercially beneficial amnesty measure, in my opinion anyway. So in essence, what this means is you can correct any errors that you've made in your past VAT returns and not incur a penalty on that correction. So to illustrate the benefit of the amnesty, you should consider what normally would happen. So generally, say you found a mistake in a VAT return where the net tax due exceeds 5,000 riyals, you'll need to notify GAZT within 20 days of becoming aware of that error by submitting the correction. If the error is less than 5,000, you can correct it in the next VAT return under field 14. So there's no need to notify in that instance. So we're really looking at those errors that are quite large and, well, at least more than 5,000 riyals. So what would normally happen is if you correct an error that's more than 5,000, it would result in the following penalties. So a late payment penalty of 5% of the tax due, which is then multiplied for each month that the tax is late. You would also get hit with a late filing penalty of between 5 and 25% of the tax due, and a return amendment penalty of 50% of the difference in the tax due. So these penalties obviously can be quite significant and increase in value as the quantum of the unpaid tax increases. So it is something to consider. So I'll take you through some practical steps in a moment as to what you can do to help identify voluntary disclosure opportunities. But first we'll cover this example on the slide, which just illustrates the benefit, I guess the saving of acting now.
Yeah, so you have a company which is currently reviewing their input VAT claim for March 19, and it's discovered that it has been claiming input VAT on vehicle expenses, which were partly used for business and private. The total amount of input VAT that should have been blocked or not claimed should have been 10,000 Saudi Riyal. However, it wasn't discovered at the time, and the error has now been identified this month. So what would be the penalty? Well, the penalty would be, as Mark mentioned, firstly, there's a 50% amendment filing return amendment penalty. So 50% of 10,000, which is the blocked amount. And then there's also a late payment penalty, which would be 7,000. That's 5% of the 10,000 over a 14-month period. So the benefit to the taxpayer would be that if they would file the amendment during this initiative period before the 30th of June, they could potentially save on an amount of 12,000 Saudi Riyal.
Yeah, so look, if you think that amount is quite minor and you're willing to take the risk, you need to remember that errors often are extrapolated over a number of tax periods. So say if in this example, if you've made the error in the March 2019 return, an error like claiming too much input VAT on staff expenses is likely to be something that you've done consistently over many VAT returns. So then you need to consider the errors that you've made in all of the VAT returns historically. So that 12,000 Riyals really starts to multiply pretty quickly. So that it really is important to at least act now and try and take advantage of the amnesty. The deferral of the payment of VAT liabilities is another amnesty measure, and it obviously follows the extension for the deferral of the VAT return lodgement. So if you're in a payment position, you can consider delaying payment to take advantage of the cash flow benefit. But it also assists importers of goods into Saudi Arabia. So if you are an importer of goods, you'll benefit from the fact that the import VAT is now deferred to your VAT return automatically. So generally, import VAT is paid to customs at the time of importation of the goods. So before the goods are released from customs, you have to pay that. Taxpayers can apply under the normal rules to GAZT for approval to pay import VAT through the VAT return, but this is at the GAZT's discretion and is not always awarded. But these amnesty measures now make that the ability to defer the import VAT to the VAT return automatic. So what you do is you don't pay the import VAT when the goods come in, they go through, and you then declare the import VAT at field 9 of the VAT return in the VAT return for the period in which the import took place. So we have an example here around how an importer of goods will benefit from this.
Yes, so here we have goods of the value of 5,000 Riyal have been imported in May 2020. Normally, it would be payable at the time of importing the goods into the country. However, under these amnesty measures, you could defer the payment of this by up to 3 months. So it would be due by the 30th of September 2020, which is the 3 months from the end of the filing, return filing deadline for the May return. And this results in approximately 5 months of cash flow saving.
And it's important to remember these amnesty measures will stop on the 1st of July. So really a short period to kind of have this benefit. So looking at some practical steps. So you're probably sitting there thinking, it's great that there's this amnesty and no penalties, but how do we even identify whether we have any risks or anything to disclose? So the starting point is to review all your historical VAT returns. So I would go back to my first VAT return and review that to check whether I've coded things correctly for that, whether I've claimed correctly. I would look if I've made any consistent errors across tax periods. So like that example in relation to the employee benefits for the car, you'd have a look at whether you've taken a position that was incorrect, say in your first VAT return or your second VAT return, which then was consistently repeated in the following VAT returns. You could do this yourself, or you could engage a tax advisor to review a sample of the VAT returns, so maybe 3 or 4, and then you can then get an idea from that samples whether there is any common mistakes or errors that have been made that you then can take in-house and fix as a result of this amnesty. You could also go that one step forward and engage an advisor to do a desktop health check. So what I mean by this is there's no need to come on site. You can engage an advisor to look at your processes, your systems, conduct interviews with the relevant people that deal with that in your business, and of course review VAT returns as well. And hopefully through that exercise, you would have a better chance at identifying any issues. I found often it's very difficult for the person who prepares the VAT return to come back and review their own work and identify issues and problems. So having that fresh set of eyes coming in and looking at it is often beneficial. And then any errors you identify, you can obviously disclose before the 30th of June and avoid the penalties. What I would also do is revisit any tax advice you've received historically. So if you perhaps got some advice on implementation, or you had a new transaction that you were going to enter into, and maybe you're too busy to implement the advice, go back now, look at it and try and implement it. If you got advice in relation to making recommendations for improvements, maybe go back now and try and implement those recommendations. Of course, you don't have to engage an external advisor. You can do a lot of things in-house. So what I would do is I'd start asking a couple of basic questions. So am I restricting input VAT on anything? So am I not claiming all the input VAT? And then I'd have a look at, all right, why am I restricting it? And whether this can be changed to kind of access that cash flow benefit. Maybe you're restricting it correctly, but maybe you're taking a position that is perhaps too strong, and you can review that. You can have a look to see whether on the other side, on the output tax side, whether you've adopted a position that was maybe 50-50 or not the most arguably beneficial position that you can now correct. Have you mistakenly claimed input VAT? So again, going back to the car expenses and other really complex VAT issues that you kind of gloss over or adopt a position without really understanding the background. So you would look at complex areas, so bad debt relief, have I claimed that correctly? Am I giving out goods for free? And other issues like that. We're going to cover a lot of these complex issues in our next webinar on Monday, the VAT webinar. So it might be worthwhile for you to dial in to that to get an idea of where in your business you can focus over the next few weeks to identify problems. You can also use the time. So you've got extensions for up to 3 months now to submit the VAT return. So maybe now is the best time to go back to your processes and really try to streamline things. So maybe you have a system generated report that you want to amend. Maybe you want to create a new report that makes your VAT return preparation really, really easy and straightforward going forward. Now is the best time. You've got a couple of months free time. You can update those processes. Maybe you don't have the confidence in your accounts payable team to identify compliant tax invoices, or even in the accounts receivable team in classifying VAT treatments, for example. You can go back, train them now, really take the time to get everyone up to speed on the VAT treatments. And you'll also benefit now from the delay in VAT payments. So consider how your business will address that, whether you submit your return and then delay the payment, or whether you're in a refund just makes sense to get that return in as quickly as possible. So there's a number of things you can do. Obviously, it's going to change depending on the type of business that you run. But if you have any specific questions around what your business or the type of industry you work in, what you can look at, please let us know. But we do have a webinar next on Monday that will cover these really complex and industry-specific issues. So moving now to withholding tax, and pass back over to Raman.
Yeah, thanks, Mark. Yeah, so withholding tax, just for the benefit of all, is a tax that's withheld on services provided by a non-resident person to a KSA resident person. So although the tax is borne by the non-resident, the compliance obligations fall on the resident person in terms of filing of the returns and settlement of the withholding tax. So similarly to the amnesty measures we discussed earlier about in the tax section, the GAZT have also announced an extension of 3 months to the withholding tax filings. So if the filing due dates fall within the amnesty period, so again between the 18th of March to the 30th of June, you have additional 3 months to file the return. Any filing deadline that fall outside of this would not qualify. So for example, if you're filing withholding tax return for June, there is no extension, and the due date for filing of that return would be July, 10th of July. And again, the measures extend not only to the filing of the return, but also a payment deferral for up to 3 months. So within the corporate tax regime, there is also penalties. There's a 1% late payment penalty, which is again for every 30 days delay from the original due date to the date of actual payment of the tax. Once again, under the amnesty measures, this delay penalties have been, these delay penalties will not apply. And again, they would apply not only to late filings, but also to filing of revised withholding tax returns, or any returns that are currently under GAZT's review. So here's a small example by which we can illustrate again the benefits of these measures.
So Company B has paid a non-resident related party 5 million reals for providing technical services in March of 2018, but didn't submit a withholding tax return or pay its withholding tax liability, which will be calculated as 5 million times the 15%, which is the rate, and the liability is therefore 750,000 reals. So by filing this return in May 2020, Company B will avoid a penalty of 180,000 reals, which is calculated on the basis of the tax liability of 750,000 times by 1% times by 24, which is the delay. So as you can see, it's quite a hefty saving, really. So for any withholding tax, it probably makes sense to review the withholding tax returns and any payments made to both related parties and any non-residents.
Yeah. Thanks, Mark. So how can the businesses benefit from these measures? Again, well, you've got a cash flow benefit. You have the option to defer your withholding tax for up to 3 months. You can agree an installment arrangement with the GAZT, and so long as you make the payments by the 30th of June, you will not incur any penalties. So all in all, again, it's a measure aimed at helping businesses, traversing through these tough times, and just assisting them with optimizing the cash flow. So what should the businesses be doing between now and the end of June? Well, starting point would be to review previous filings, to check and ensure that you have withhold the correct rate of withholding tax, particularly on related party transactions, because the rates are generally higher than when services are provided by independent third parties. You could also look at any previous tax positions you've taken. So for example, if you have availed of a treaty benefit, say between the KSA and the UK, for example, and you've now realized that you have incorrectly applied the treaty benefit and therefore underreported the withholding tax, you may wish to amend these returns. Generally, we would recommend treaty benefits is quite a complex area. So if you have such issues, then maybe it might be worthwhile to maybe seek the support of a consultant who can guide you through the process and better understand your position. You could look at reviewing some of your past assessments in terms of what's been agreed with the GAZT. So classic example within the withholding tax regime is technical versus management fees. Obviously, they have two different rates of withholding tax. Management is 20%, technical is 15%. And again, it's a good way of ensuring that you are consistently adopting the same procedures in subsequent filings to minimize the risk of an audit. You could consider approaching your relationship manager as well to amend any withholding tax returns if it has transpired that you have underreported the tax. Also, we see this quite a lot when with our clients that they do not deduct the withholding tax on salaries that are paid to non-resident individuals who may not have a valid Saudi Iqama. And the answer to that is the treatment is incorrect. We've seen on numerous occasions the GAZT practice is to apply the withholding tax unless the employee has an Iqama and GOSI has been settled on the salary. And one final point is withholding tax is also applicable on any related party set-offs or internal adjustments between payable and receivables. So it's often overlooked or clients may not be aware of this, but that set-off is considered as a deemed payment and therefore the withholding tax would apply. And since it's being a related party, the minimum rate would generally be 15%. So it isn't the best interest of the businesses to take the opportunity that is being presented to them to review their withholding tax positions.
Okay, so moving to excise tax now and the amnesty measures. So I guess similar to the other taxes, there's both a lodgement and a payment deferral. So normally for excise tax, you pay it at the date of importation. However, under these measures, a temporary return has been introduced to facilitate the extension of the payment due date. So if you look at the table, obviously 2 of the months have passed, but if you've made an importation in May, you now have until the 31st of August to pay that excise tax, rather than having to pay it at the date of import. So obviously a natural cash flow benefit from that extension. There are a number of penalties that have been waived under the amnesty in relation to excise tax, and I might get my colleague Omar to jump in whenever he feels necessary with some expert comments, maybe particularly with regards to the example. But so under the normal rules, there's a late payment penalty, which is 5% of any of the tax due for each month that you're late. And there's also a late filing penalty, which is between 5 and 25% of any of the tax due. So under this amnesty, what is the benefit to the taxpayer? So you can correct any mistakes without incurring any additional penalties. If you need to amend an inaccurate value declaration, for example, you can do so without a penalty. If you're a producer of excisable goods, there's now no late payment penalties or late filing penalties. So you'll have that benefit as well. So I guess moving to this example, if you have an excise goods producer who is registered for excise tax, they will have to submit their excise tax return on a bi-monthly basis, and the return submission deadline is the 15th of the following month. So for example, if you have January and February as your tax period, your deadline to submit the return is the 15th of March. So for sugar sweetened beverages, since excise tax was introduced on the 1st of December 2019, there's an exception for the submission of the December 2019 return where the excise tax return can now be lodged by the 15th of March 2020. So it's expected that if the adjustment to the retail sales price was not made when filing the 15th of March 2020 lodgement, then there'll potentially be a late payment penalty due because you've underdeclared the retail sales price. So that would naturally lead to an underpayment of excise tax. So if we look at this example, so company D is an excise registered person selling sugar sweetened beverages in Saudi and declared the retail selling price as 1 million reals in December 2019. The producer subsequently found out that the actual retail selling price was 2 million reals. So the producer wishes to pay the excise tax difference. So that's calculated as the 2 million minus the 1 million that was initially declared times by 50% and equals 500,000 reals. And that's the difference in excise tax in June 2020. So if you disclose this error before the 30th of June, you'll save 150,000 reals in penalties. So it's a late payment penalty of 75,000, which is calculated on the basis of 500,000 times by the 5% multiplied by the 3 months. So as there's an under declaration of excise tax payable in this example, the taxable person may amend the excise tax return, and as the submission takes place after the filing deadline, GAZT may impose late filing penalties up to a maximum of 25% of any tax due. In this case, so if a late payment penalty is imposed at the highest limit, we're looking at an additional 25,000, which is 500,000 multiplied by 25%, making the total potential penalties payable up to 200,000. So it can actually be significantly higher depending on whether the GAZT chooses to impose penalties at the higher end. Omar, if you have any questions or comments, feel free to jump in. Otherwise, we'll move on.
Thank you, Mark. Thank you, Mark and Raman. Right, I hope you guys can hear me really clearly. Right, so I think that's a very good point, Mark. This is, however, the example is mostly in relation to excisable goods producer. So like, the sweetened sugar beverages producer, cigarettes producer, etc. But I think there is something that comes to my mind as well. Apart from the excisable goods producer or importer, I believe this is also very relevant to holder of excisable goods when the excise tax was expanded to include sugar sweetened beverages on 1st December 2019. Holder of excisable goods such as super or hypermarkets, one-stop FMCG distributors who hold these excisable goods for commercial purpose will have to submit a one-off transitional excise tax return 45 days from the excise tax effective date, as in 45 days from 1st December 2019 or by 14 January 2020, right? So there is a one-off excise tax return that these businesses will need to submit. Those who fail to submit the one-off excise tax return simply due to probably ignorance or lack of understanding of the excise tax requirements should really consider taking this window of opportunity to look back and reassess whether you were once in that one-time excise tax bracket and consequently submit your excise tax return now during the amnesty period to minimize or even to mitigate completely the risk of you being penalized. So, you know, I think this is really relevant for supermarkets and hypermarkets who held excisable goods on 1st December 2019. Also.
Great. Thanks, Omar. That's some good information. So if you're obviously in the business, the retail business, this is obviously very, very important to look at. So under this amnesty measure, the goods will clear customs without the excise tax being paid, and a temporary return will be submitted. So this has the effect of delaying the excise tax liability by a number of months. Remember, it only applies to imports up to the 30th of June 2020. Any imports on or after 1 July will be subject to the normal rules. Finally, just an example that really illustrates this. So goods imported on the 1st of June 2020 would normally be subject to excise tax of 50,000 rials, which would be payable on the date of importation. As the excise tax is deferred and it's paid through the temporary return, which is now due on the 30th of September, you have a 4-month cash flow saving. So again, assisting businesses very much in line with the other taxes. Practical steps. So similar to the other taxes, review your historical returns that you've submitted. So go back to your first excise tax return, review that. If necessary, engage a tax advisor to review it. They can conduct a sample review and identify any common issues that you can then take in-house. Again, a health check on the wider excise tax implications of your business might be worthwhile, especially if you've never engaged an advisor to do one. Again, revisit any tax advice that you've received from advisors and consider whether you have addressed the recommendations. Maybe you didn't have enough time in your normal business to do so. Given this extension, it provides that extra time to go back and revisit these things, and also give the opportunity to update your internal processes. There's a couple of questions you can ask yourself to kind of point you in the right direction. Have I used the correct retail selling price for excisable goods? If not, should I correct this now? Have I moved goods without suspension, without reporting and paying the excise tax? So again, that's getting at your internal processes as well, and whether you're really tracking and recording things. Have I given excise goods out for free, such as to employees for their own personal consumption or for promotions or as gifts, without accounting for the excise tax? So again, do you have processes in place that ensure that you're really paying the correct amount of excise tax when you should be? You should prepare your excise tax returns as usual, but similar to that, consider delaying the payment to take advantage of that cash flow benefit. Omar, if you have nothing else to add on the practical steps, I will jump to the next section.
No, this is fine.
Thank you.
Sorry.
So finally, with some other measures that have been introduced in conjunction with this penalty amnesty, and I'll pass over to Raman.
Yeah, so I'll briefly touch upon them, but basically it's a relaxation by the GAZT of the audit and examination procedures. So during this period, they are willing to give taxpayers more time to provide the requested documentation, reconciliations, and so on. They've also temporarily suspended collection procedures if the tax liabilities have not been paid. And also they have suspended the requirement for taxpayers to provide a bank guarantee where the taxpayer has appealed against the GAZT assessment and the case is waiting to be heard in front of the appeal committees. A couple of other measures with regards to refund requests, we are finding that the GAZT is expediting them, so it's probably a good time if you are in a repayable position to file your current and any overdue past filings and try and get the cash today. And A couple of other minor points is in Saudi Arabia, we have the expat levy, which is a fee for employees' dependents. Now that has temporarily been suspended up until 30th of June 2020. And at the same time, work visas that would have expired during this period have also been temporarily extended. Back to Mark.
For the summary. So I mean, as you can see, the GAZT amnesty measures are quite wide-reaching in the sense that they apply across all taxes and offer significant benefit to taxpayers to go back and, I guess, get their house in order by reviewing any mistakes and making those corrections. I will say, in my experience, you don't really see tax authorities offering such a wide-reaching amnesty. So it's really encouraging and something that I think most taxpayers would definitely benefit from. So what you should do is review your tax compliance history. So go through your historical returns and really spend some time reviewing it, or get an advisor to do it if you don't have time. They can review a sample and you can go from there. Because now is the time to really get on top of those mistakes and correct them. Consider whether the submission and payment deadlines, the extension really makes sense for your business. So I know for that, if you're in a refund position, obviously the payment extension is not going to really assist, but you'll still want to get that return in as quickly as possible. You should also use the extension timeline to make any internal adjustments and streamline processes. So I spoke about that with regards to that, but it really does apply across the board. You should go use the extra 2 or 3 months to update your processes, develop whatever reports you need, train your staff, because then that benefit is not just going to be seen in this month or based on your historical liabilities, but it's something that you can take forward and really kind of optimize your business and make future VAT returns or any form of compliance really easy and streamlined. Look, I mean, that's the end of our formal presentation. I've noticed a couple of questions that have been put in the Q&A, and I'm assuming either Dinesh or Dao has responded throughout. We can probably take any more if Dinesh, is there any questions you want to really focus on to bring to the attention, or any common issues that came up?
There is one question related to the accelerated payment. There was a question that some of the attendees were asking about the accelerated payment. Is there any extension or implication of the first accelerated payment for the December 2019 year-end clients?
No, you're still required to file the, to pay the first accelerated tax payment. And then you can request for an extension to the payment for the second and third installments.
Anything else, Han? Anything from the indirect tax side or from the excise tax side?
I'll step in. It's Mubin here. There was a question about how old can the transaction be, or how far back you can go. So I thought that'll be a good question to talk about. So the answer to that is, look, there's specific statute of limitation rules under the Saudi rules. So whether it's VAT or withholding tax or corporate tax, they all have specific statute of limitation rules. So that's how far back the GAZT can go, unless they detect fraud or evasion. So generally speaking, you can go back all those open years if GAZT has not made an assessment as yet. You can go back even further if you think that there's been an error that's been made, and if GAZT was to discover it, there would be an issue. So, and you can then choose to make a voluntary disclosure in those circumstances as well.
Yeah, I think a common, I guess, misconception as well is that taxpayers think that once they've been reviewed for a period, that period is is kind of off limits now for GAZT if they've signed off on it. But I think you need to always remember that if new evidence comes to light, and it's drafted vaguely, I think on purpose, they can still go back, GAZT can still go back and review those periods. So it's not as easy enough to say we've got the sign off, we're okay. But if you've just gotten lucky and they've missed something and they later go and find it, that's certainly something they can reopen.
Yeah, definitely. I mean, there's the new zakat regulations, and we will be, the webinar on Wednesday will be discussing that in more detail. The statute of limitations has now been extended to 10 years and even longer in some cases, where the GAZT have uncovered information that was not made available to them at the initial assessment stage. So I guess, yes, there is a statute of limitation within the tax zakat laws and with VAT as well, but at the end of the day, the GAZT does have the authority to go back further if new information is made available to them.
So we've just got another question that's just come in. Is GAZT charging 5% or 25% or something in between? Is it always the same? So I can sort of start off. I can start off with answering the question. That's a related question, and I think I'll get Mark or Rama to step in. So, look, the penalty rates are different for VAT. They're different for zakat. For corporate tax, they're different. For withholding tax, they're different. So, and they're different types of penalties. They could be late filing, late lodgement penalties, and there's also late payment penalties, right? So now, depending whether GAZT is charging 5% or 25%, look, it depends on the nature of the offence, whether there's been past errors being made when GAZT determines as to where in the range they're going to pitch the penalty at. If they see it as an inadvertent error, something that the taxpayer has made for the first time, it's likely that the rate is going to be at the lower end rather than at the higher end. So far, what we've seen is generally at the lower end rather than at the higher end, based on what some of our clients may have received in penalties. Mark, would you like to add anything there, or Raman?
Look, I think you've covered it. I think it's really not, it's not the case that they always apply at the 25% or the 5%, or whether it's a mixture. You've got to look at the circumstances and the actual facts of each case. So if you're a good taxpayer who always tries to comply and meet their tax liabilities on time, you'd obviously argue if they did happen to impose a penalty that was more than the minimum, you'd have to argue that the minimum should apply. So look, I think it's really a factual scenario, but do remember you do have that opportunity to contest the penalties, and if you think it's unfair, and you have solid reasons for thinking so, then obviously make sure that you appeal.
If anyone has any specific questions about penalties that would apply in their particular circumstances, whether it's late lodgement penalty or late payment penalty, feel free to email us and we can explain them in a bit of detail, because the penalties can be complex and you've got to work out which penalties can apply when. Look, I think we're a couple of minutes to go to 11 a.m. So there's no more questions at the moment. So I think we'll stop there. Thank you for joining us today for the webinar. We've got 2 more webinars coming up. One on VAT update and one on corporate tax and zakat update next week. So look forward to seeing you at those webinars as well. And Ramadan Kareem to everyone, and thank you for joining us today.
Thank you, everyone.
Thank you, everyone. Thank you. Take care.